Now, I'll touch on this again in a few minutes, but I thought this was really interesting and almost backwards. But China's top banking regulator said he's very worried. Remember, this is the top banking regulator. He's very worried about risks emerging from bubbles in global financial markets and the nation's property sector, sparking fresh concerns about further tightening in the world's second biggest economy, and stocks dropped as a result. You don't often hear about that. In fact, if you look around the US, they're saying everything's fine. Everything's going well. Everything has never been better. China's financial regulators are walking a fine line trying to curb risks at home while limiting disruptions from abroad as the economy opens wider to foreign capital. Interesting, right? I mean, you look around today, find me a case in where you're hearing that. This is completely upside down. China's monetary policy has not been as easy as the US and Europe. This latest comment will create worry of further tightening. So I'm going to pay close attention to what happens in China. Let's move on. Food prices are soaring faster than inflation and income. So we are looking around and seeing the people who are probably in the bottom 50% of incomes being hit the hardest. Because if their disposable income, they've got a few bucks left over at the end of the month, suddenly their prices that they're paying are a few bucks higher. They're gone. This is the way that it is unfortunately taking place today, whether it's the gasoline prices that are rising, which I'll talk about in a second. You look at the food prices, whatever it might be. Unfortunately, this hits the people who are the worst off situation right now, and then they get hit even harder with inflation on top of that, the hidden tax. My goodness, this is not good. Of course, that connects in with the commodities themselves. You look at this, the cost spike, the prices of key food commodities are at multi-year heights. Sunflower seeds, corn, soybeans, doesn't matter. Look anywhere you want to and you will see these spikes taking place, going at a dramatic pace. And, initially we were told, oh, this is because of the shortages, and this is because of crop failures, and this is because of this and that. There's always an excuse. Look around at different places in the world, different commodities around the world being produced in different places, and somehow they are basically all up. You can't blame one thing. There is something that today we are seeing, which we have not seen for a long time, and is very reminiscent of, let's say, 2007 into 2008. And there are some big banks out there that are calling for a super cycle in commodities. I think it's maybe a little bit too early to tell if we're in that realm, but I'm definitely paying attention to it. And this is obviously going to hit people very hard where it hurts at a time when, people need a lot of support, if anything. This is just a chart showing you that food prices have begun to rise very sharply. And you can see the spikes before. This is going from the mid 2000s up until the present. And essentially, we have seen a major spike, whether it's agriculture, whether that's grains, but it is quite obvious that this is going higher at this time right now, along with stocks, along with real estate, and so much more. I really wanted to scroll through this and show you the charts that they have in this article, show you the information that's here because it was done really well. But essentially, fast food menu prices have soared at this point. If you, no matter where you are right now, if you have an example, for example, the Big Mac, or you're getting your simple groceries, maybe you are buying whatever that might be, potatoes or whatever it is. If you have seen the prices rise over the last year or maybe a couple years or whatever it might be, post that in the comments. Just say the country that you live in, say the state, the city, the province, wherever it might be, whatever details you feel comfortable giving, and then the price and maybe the percentage terms. It has increased by 5% or 10% or 20%. That's what's happening right here. This article covers specifically with fast food, and I found it to be interesting just to see how this has been taking a beating. And there are different factors here because there's the employment side. There's also the actual cost of the goods, the materials. Sometimes even like for example, the plastics that are being used here are much more expensive because more plastics needed to be created during this period. There's a lot going on, that's for sure, and that's showing up in certain prices being passed on to the consumer. Gasoline prices over $4 in Orange County. This has been a serious issue for people who are relying on low gas prices, but it looks like the price of oil has remained elevated. I pulled a couple things here from Northman Trader and another one I wanted to show you. Check it out. Last week, Fed. Rising yields are a sign of confidence. This week, Fed. Rising yields cause stress that requires intervention with a standing repo facility. You know what's going to happen. They obviously want to be in this market as much as humanly possible. Then you have this. You know you've reached a low point in the financial market history when you get a more honest assessment of the state of global markets from a Chinese regulator as opposed to the bubble denying mantra propagated by Western central banks. How do you deny that comment? That's what's happening right now. The ECB's Panetta, we must establish the credibility of our strategy by demonstrating that unwarranted tightening, unwarranted, by the way, that means anything above 0%, I guess, will not be tolerated. We should not hesitate to increase the volume of our purchases and to spend the entire PEPP envelope or more if needed. That means print until you destroy the currency.